Hi, and welcome into the Finance Report. I'm David Wogenson, alongside Mallory Hoff and our guest, David Reyes. Over the next half hour, we'll be discussing what it takes to get to and through retirement.
Here's what's ahead. First, we'll talk about areas retirees should address. Then in 15 and 15, we'll cover taxes, investment risk, and growing your savings. We'll also talk about your road to retirement. That conversation and so much more ahead.
Joining us now is David Reyes, the Chief Financial Architect of Reyes Financial, a San Diego area firm that focuses on preparing people for a successful retirement. David is also a popular radio show host. So David, let's start here. What do you believe a more secure retirement looks like?
Wow, that's a large question, right?
We have to start it. We have to grab their attention immediately.
I guess so. Grab my attention. So, that again, doing this for 28 years, right? You think I know, here's the answer. Well, it's more complex than that, unfortunately, like life. Really, when I think of secure, I think of predictable cash flow, right? And I think one of the biggest things that are missing in retirement plans, besides Social Security, only 10% of our population has pensions. So I would say predictable income, which creates more security. Because in the end, we're just trying to replace a paycheck anyway. So predictable income would be, and guaranteed income would be the two things I would think about right off the bat for a secure retirement.
What else do you feel retirees and pre-retirees are missing out on right now?
I think it goes back to the same thing. We're caught in this growth mode as we save money. I always say saving money is the easy part. Spending money is the hard part, depending upon who you are, right? Sure. Most people, it's because we kind of live in this scarcity mentality when we retire. Because if I spend $1, I have $1 less. So really, it goes back to the same thing about creating predictable cash flow, multiple income streams in retirement, above and beyond just Social Security. So that would be probably the main thing that I would look at.
Why do you find people are hesitant or worried about spending that money? Because you would think when you get to retirement, you would like permission to spend the money you've worked so hard for.
Really?
We talk about that. I always say my first client I ever had, I actually walked out of that room and said, wow, I had to actually tell this person, give them permission to spend their own money.
Really?
Well, it's kind of weird. It's like an oxymoron. We have two problems that are really facing each other, is that we're afraid to run out of money. We're also afraid to spend our money. Think about that conundrum for a minute, right? So that's part of the counseling that we have to give clients is it's okay and here's how much we can spend. But the fact is most people have no idea in retirement. They have this $1 million, $2 million, whatever they have no idea how to safely spend that money. So that's always the counseling and the planning that revolves around that all the time.
How hard is it to convince that individual or a couple who has been picking away at their pile of money for years and years and years that it's time to create an income plan?
It's not hard. I think the biggest problem is that people wish they would have, come to somebody sooner. Whether it's us or somebody else. I would say if you don't hire somebody, right? Saving money is easy. Being efficient with spending your capital and make sure you don't run out of money in retirement and being confident in spending your money is way more difficult. And how many times you can do that in your life? One time. Right?
So what you're really getting at here, sounds like, is there's a big difference between investing your money and then building a comprehensive retirement plan.
They're completely different things. It's like, they're completely different. Again, saving money is different than spending money, and the game plan to do that, because all we're focused on is growth in retirement, right? Now growth, we call it kind of the third rail. We want to protect capital, maximize cash flow, and grow capital. That's a lot different, completely different. So the investment planning and the strategy has to be completely different than when you're saving money in retirement.
I think it's only natural to have a little bit of fear of missing out on potential gains. At what point pre-retirement is it time to pull back on the amount of risk you're taking on?
I would say within 10 years. So if somebody wants to retire at 65, I would say 55. You want to start, it doesn't mean you go all bonds or cash, but it just means you need to be more hyper aware of what's happening. That's when for sure you need to hire an advisor, right? In my opinion, you need to hire an expert advisor in retirement income planning specifically, that has a tax background, those kind of things, which are going to be stressful to the portfolio. But that's where I would start looking to hire an advisor and start really monitoring your portfolio a lot more.
Let's revisit what you said just a few moments ago, though. If you don't hire you, please get someone, hire somebody. But here's the problem with what you're talking about. There's you, who focuses on the retirement planning aspect, and then there's down the road who only focuses on growing, hang in the market, wait for it, it'll come back, etc.
Yeah, that's the problem. So to be very specific, hire somebody who is a retirement income planning expert. There's not a ton of them out there. There are. We're not the only firm in the country that does retirement income planning, right? We've done it for almost 30 years. But the fact is that that is a very niche part of the marketplace, because a retirement planning expert, that could be 35 years old, right?
Yeah.
You want a retirement income planning expert.
Okay, I think we all know that our portfolio should match our age and stage. But how often do you find somebody walks in for a first appointment, a first visit, and you realize very quickly they are taking on more risk than they realize in their portfolio?
Every day,
Okay.
every client.
Yeah.
Every client.
Yeah.
I mean, I had a client come in the other day, and husband and wife, and a lot of times this happens where, you know, you're the wife and you're more conservative and you're more aggressive, right? And so it's funny that the wife was the aggressive one in this case. And once we went through, we have this risk-o-meter that we do that really kind of quantifies the risk. And she went from like aggressive to like super conservative in about 5 minutes, right?
Okay.
Because she realized, because we talk about losses of capital. So you have $1 million, you lose 20%, that's $200,000. All of a sudden, well, that's too much, David.
Yeah.
Right?
Yeah.
Yeah,
Right.
you're no longer a millionaire.
So, you know, most people fit in kind of the 5 to 10% range, meaning that's the most they want to lose in retirement. And that's how you have to manage clients' money.
Sure.
Speaking of losing money, tax planning, if it's overlooked, what kind of financial costs could we potentially be looking at if we're not taking into account our nice old Uncle Sam, who wants a piece of what we have?
You know, taxes are complex, and my partner's a CPA. We work very close with business owners, retirees. Taxes are a big piece of the portfolio of how we're looking at it. And it just depends upon, you know, of course, Social Security is taxable up to 85%. You're going to pay taxes on the distribution of your retirement accounts, but also the disposition of major assets like selling a business or real estate, which we'll talk about maybe in another segment. But it can be significant. It can be tens of thousands of dollars. It can be hundreds of thousands of dollars, depending upon the asset, the type of situation.
David, always excellent information, which means the time to act is now.
That is right. Today, exclusively for our Finance Report viewers, David has a great offer for you. Right now, for the first 5 callers with a portfolio of $500,000 or greater, he's offering a complimentary retirement blueprint just for you. This will allow David and his team to sit down with you personally and provide you with a roadmap, analyzing where you are right now and discuss your best steps to really get ready for a successful retirement. The number to call, 858-293-4644, 858-293-4644.
How nice would it be to go through life without any regrets? Well, plenty of people wish that were the case when it came to their retirements. David, how common is it to meet with someone who has very real regret when it comes to their plan for retirement?
Yeah. Well, we all have regrets, right? I mean, that's just life, right? I have them, you have them. But I would tell you that, you know, I would say regrets are a piece, but really we're kind of dealt with the card we have today.
Sure.
I don't spend a lot of time on that. We'll talk about some scenarios where that is a problem. We have regrets that are real, but most people show up with what they have.
Yeah.
And we're going to do the best of what we have. And most people don't make major mistakes, but there are situations where it can become pretty catastrophic and things that maybe happened in the past that we have to kind of fix.
Human nature to procrastinate, obviously. I think we all know that. So for the person who thinks maybe they've waited too long to start planning, what do you say to them?
Today's always the right time.
Yeah.
You know,
Yeah.
now, today. You know, I have clients that are 75, they're coming to hire me for the first time. I mean, it's just so, you know, earlier is better always.
Sure.
But today is the right time. So that's what I always tell people.
I'm
glad you're here. Sorry.
Oh, no, absolutely. I want to talk about a big loss when you're in or nearing retirement. Paint me a picture. What can that look like for someone?
That's where the regret happens.
Yeah.
Right. I have a couple scenarios. I'll tell you one in particular just recently. So last year in 2022, the market was down 20-30%. Had a client of mine that came in. He lost $1 million that year. You know, he had $3 million starting in January. By the end of the year, when he came to see me, he had $2 million. And he was a year from retirement.
Painful.
Right, very painful. So $1 million loss within a year of your retirement. Now he's an aggressive investor, and that's how he kind of made his money. So he's still going to be okay.
Sure.
But psychologically, it messes with you a little bit. So it was fine for the planning. It was okay. But my point is once you get to a certain point in time, it's kind of gambling. Once you've kind of won the game, we want to maybe change some things to how we're investing our money, for sure.
Absolutely. Preventing a big loss. What's the best way to do that?
Have a plan. You know, you realize what we do is figure out what we need to have a really high level retirement and say, okay, that's the money we're going to use for income. If we have extra money, we can be more, you know, growthy with that money. But the point is that have a plan that deals with, we kind of separate cash flow from growth.
Sure.
And so make sure we solve for cash flow first, and then we can have more aggressive growth if that's something that's appropriate. But most people don't even want that because they don't want to lose money.
Sure.
But the reality is that just making sure we're in a position to we're managing the money in a way that we have a saying, we want the most amount of income, least amount of risk, and never run out of money.
So with all of that in mind, do you find that there are some folks who are waiting for what they believe will be that perfect time for them to retire? They almost want the stars to align.
Yeah, and quite frankly, that's not necessary in most cases.
Okay.
A lot of times that revolves around Social Security.
Yeah.
So that's 67 for most people, and they say, well, I got to work, and they hate their job, and they're like holding out to 67. My biggest joy is, okay, great, we put a plan together, but you retire at 65.
Sure.
Right, and so most times that's kind of misplaced.
Okay.
And so that's why the biggest thing is sit down with somebody and create a plan so maybe you can figure out you can retire sooner than you thought.
Yeah.
And so I would stay off of that kind of thinking because usually it's not correct.
So there's the folks waiting for the stars to align. There's also the folks who think they need to hit a certain, what they think is a magic number.
Yeah.
What do you say to them?
Well, the magic number is how much income we can produce in retirement. Right.
There we go.
And that's
Okay.
typically, it's not $1 million, $2 million, it doesn't matter.
It's not
right?
an asset problem, it's an income
It's a
problem.
cash flow problem.
Yeah.
So we're solving, all we're doing is we're solving for the net income they have in their paycheck, right? You get
Sure.
a paycheck, right? What's your net paycheck? Real simple, that's the first question I ask, right? And that's what we're trying to solve for.
David, how often do you find when it comes to proper tax planning that people are under the impression that they are going to naturally end up in a lower tax bracket during their retirement years?
All the time.
Yeah.
I mean, it's kind of one of those fallacies, those rules of thumb that are incorrect, right?
Yeah.
You know, I can only speak for our clients. Our clients are going to be in the same tax bracket pretty much because we have money in retirement.
Sure.
Right? So if somebody's in a 20% bracket when they were working, hopefully we can replace their income. Guess what? It's a good thing. You're probably going to pay the same taxes because you have money.
I'm going to put a to be continued on this portion of our conversation. David, thank you. And coming up on the Finance Report, we'll map out the road to retirement. And up next in 15 and 15, David will put the other David on the clock.
So how can people go about making every day a Saturday during their retirement?
Well, every day is a Saturday in retirement, right? That's what I tell people. I say, you know, you're not working anymore, right?
Yeah.
You're going to spend more money.
But first, today, exclusively for our Finance Report viewers, David has a great offer for you. Right now, for the first 5 callers with a portfolio of $500,000 or greater, he's offering a complimentary retirement blueprint just for you. This will allow David and his team to sit down with you personally and provide you with a roadmap analyzing where you are right now and discuss your best steps to really get ready for a successful retirement. The number to call, 858-293-4644.
Back by popular demand, it's 15 and 15 on your TV screen. 15 topics in 15 seconds for David. You ready to speed it up?
Let's go.
Let's go. Question number 1. Your retirement is meant to be special for you. So, David, when it comes to the breakdown, is retirement really all about the numbers?
No, it's about quality of life. It's about, you know, David, how much money can I spend in retirement, right? And so really that's the fun part. I always say once I know a client's story, then the planning's easy. So that's what it's about. It's about making sure we have enough income to do all the stuff we want to do.
A sincere answer.
Yes, it
I
is.
like that. Question number 2. Speaking of numbers, a survey found that 42% of retirees wish they had been better prepared for taxes. Why are they so often unprepared?
Yeah, I think tax is always that kind of aloof thing that people don't, you know, really understand.
Sure.
But the reality is tax are going to be what they're going to be in most cases, right? We're trying to replace a paycheck in retirement. Most of our clients are going to have the same or more money in retirement than they started with. Tax are going to be about the same, but at least with the planning that we're going to do, we're going to make sure they know what their net income is, what
Sure.
their net paycheck is. And so really it's a matter of how do we do the planning around taxes to make sure we're mitigating those taxes, and it's part of the plan.
I'm going to follow that up with this. There's a lot of misconceptions when it comes to taxes, as you just noted, including some tax traps. What surprises does Uncle Sam have in store for retirees?
Yeah, I think one of them, 85% of Social Security is taxable. Some
Yeah.
people don't even realize that. All of your retirement income in IRAs, 401ks is taxed as ordinary income, which is the highest it can be. And so a lot of things is how do we, from a planning perspective, how do we mitigate that? How do we convert to tax-free investments? How do we tax defer a little further in retirement? So the tax trap is really maybe the client not understanding the things that they're going to have to pay for, that they didn't think so.
All right, but you had my attention at tax defer and tax free. Sounds
Yes.
like a win right there. Question number 4, taking a look at the market. What do you say to the retiree that's being told by their financial advisor when it's going down or acting all crazy, hey, just hang in there, it's going to come back?
Oh yeah, great. I call it a play rewind because that's going to happen about every couple of years, right?
Yeah,
Don't
yeah.
worry, it's going to come back. The problem is that when you're spending money in retirement, it's not coming back because you're spending and selling your assets when they're down. It's a permanent loss of capital. that means that client is not properly invested. That means the risk is too high for that person. So anytime a client feels that way, we need to make sure we have to reassess their ability to take on risk.
The right asset allocation,
Yes.
it matters. Question number 5 on the note of investments. For those in the retirement red zone, how do you find that happy place, though, about investing the right amount versus not taking on enough risk?
Yeah, I mean, that's typically not the problem. What we're trying to always do is solve for cash flow, right? So it's almost like we're gonna buy cash flow and invest the difference, right? So once we know the income needs for the client, that's the most important piece, and we can make it guaranteed income, we can make it stable income, but the reality is knowing how much money we need for cash flow and how much money we need for growth.
Understood. Yeah, the game changes when you're on the verge of retirement. Question number 6, when it comes to having a complete retirement plan, what do you say to someone that comes to see you for that second opinion service and they've been sold the stock and bond menu?
Yeah, I say, well, it's not doing so well. Last in 2022, the stock and bond portfolio, balanced, quote, safe portfolio was down 20%. Most of the clients that come to me don't want to lose more than about 10.
Yeah.
So that's inappropriate. So the fact is there's other assets besides stocks and bonds. We'll use sometimes guaranteed lifetime income annuities. We'll use real estate in some cases. So it's a game. We just want to have all the pieces to use when they're appropriate for that game.
You used the word inappropriate right there. I think most retirees would hate to have anyone look at their plan and it's like, this is inappropriate.
Yes.
Yeah, no winners in that situation. Question number 7, we all wish there was a straight path to retirement, but twists and turns, they can happen. However, some people try to take shortcuts. What kind of consequences can await someone that's taking the shortcut to retirement?
I think the real shortcut's not having a plan. I mean, the shortcut is, I'm going to do it myself, and I'm just going to hope my assets go higher, and I'm going to spend those assets. So I think there's no real shortcut. The shortcut is, hey, how do I have a written retirement income plan, and then how can I invest those assets accordingly?
Hope. Don't hope.
Nope.
Hopes and dreams will not get you to and through retirement. Great news. We're pausing the clock right now. Halftime of 15 and 15. A lot of great information here, which is why David has a great offer today exclusively for our Finance Report viewers. Right now, for the first 5 callers with a portfolio of $500,000 or greater, he's offering a complimentary retirement blueprint just for you. This will allow David and his team to sit down with you personally and provide you with a roadmap, analyzing where you are right now and discuss your best steps to really get ready for a successful retirement. It's a game plan to get you where you need to be. The number to call, 858-293-4644, 858-293-4644. Back on the clock we go. Topic number 8 of 15 and 15. David, another survey I saw said baby boomers are delaying retirement because of inflation. What can they do then to have a plan that potentially outpaces inflation?
Yeah, well, at a minimum, we want to keep pace with inflation, right? Typically, that's been stocks. Stocks over the long run are probably going to run 8-10% over time, again, of a long time. But the reality is, if we can just keep pace with inflation, inflation's run as high as 10%, it's average 2 or 3%. So that's kind of our benchmark. So we want to invest in stocks, real estate, things like that can produce cash flow, and that can also have the opportunity to keep pace with inflation.
Diversification. Question number 9. What if I told you I saw that 57% of retirees are unsure about whether or not they can afford to retire? What can be done to raise confidence?
Yeah, I think a lot of it's between the years. Most people I sit down with that are in their 60s, late 50s, early 60s, are probably on track.
All right.
But again, it's scary to kind of spend your own money without a plan. Easier to save, harder to spend. So sit down with an advisor and get a retirement income plan and see if you're ready for retirement.
Perfect segue. The unexpected, the hardships, the desire to spend more, all sorts of things pop up for retirees. So how do they go about planning for the things they're not necessarily thinking about?
Yeah, there's 2 things that always come up that they're not thinking about. One's death. Death of a spouse is a major risk for clients, I think, number 1. Number 2 is long-term care. Those 2 issues combined because, when somebody passes, we're going to lose Social Security. If there's a pension involved, are we going to lose the pension, right? So a death of a spouse is real important. And also those healthcare costs are something that's a lot overlooked and really not taken care of properly.
Yeah, they could be your largest expense in retirement. Combine that with taxes and oh boy. Question number 11, Saturdays give us a ton of freedom to accomplish so much. So how can people go about making every day a Saturday during their retirement?
Well, every day is a Saturday in retirement, right? That's what I tell people. I say, you're not working anymore, right? You're going to spend more money regardless in retirement. So we got to make sure that we have to solve for their retirement needs for lifestyle, making sure that they have enough, not to pay the bills. How much do we have to go see the grandkids and visit our children and all the fun travel we want to do? And so it's pretty easy in the end of saying, okay, are we there or not? And so it's really solving for that lifestyle.
All right, question number 12. Retirees certainly want to keep more of their money. So what kind of strategies can help them get the most out of their money?
Well, a lot of times, believe it or not, sometimes we'll use principal protected lifetime income annuities. Right, you know, as of this airing of this show, we're getting 6, 7, 8% distribution rates for some clients, not rate of return, distribution rates. Think of like a pension, those types of things. So sometimes it's best to forego our bond allocation and put our money into a guaranteed lifetime income annuity where we can get lifetime income that's going to be a lot higher than a bond portfolio.
Well, I'll follow it up with this. Social Security, pensions, obviously the longevity of some of these things in question. So are retirees facing a retirement income crisis?
No question. It's a problem.
Yeah.
I mean, it's a problem. Social Security is set, I mean, it's a moving target to run out of money, by 2033, 35. There's going to be significant change in the Social Security system. They're probably going to move the full retirement age to 70. You're probably going to increase the amount of contributions that people need to make in retirement.
Yeah.
You maybe do even some different qualifications. If you have a pension, a federal pension, you'll get Social Security. There's all kinds of things they're going to have to do. Medicare is another nightmare. I was reading a story the other day. We spend about 2 to 3 times more than most developed nations on healthcare.
Yeah.
So we got all kinds of issues with that. No
We
question.
sure do, and that's why we needed to go over 15 seconds on that answer
Yeah,
right
we did,
there.
yeah.
It's a loaded one. Question number 14, what should our mindset be then when it comes to having multiple streams of income during retirement?
We should embrace that.
Embrace.
Right. Most people, only 10% of retirees have a pension. The only income source they're going to have is going to be Social Security. So at our firm, we're usually creating 2 or 3 different types of income sources, predictable and sometimes guaranteed income sources.
I'll go sidebar. How often are people unaware that they can have multiple sources?
Completely unaware, right? Yeah, completely unaware. So it's a big education. I spend the most amount of time explaining the difference between growing assets and producing income in our portfolio.
Yeah, education is key for your money. Lastly, question number 15, robo-advisors, what are your thoughts on them, and when is it time to speak to a real person?
I think, a robo-advisor is fine if you're just investing money and you're want to do it kind of on autopilot. There's nothing wrong with that. You get into your 50s, hire a retirement planning expert for sure.
Okay, we didn't need 15 seconds for that answer. Pretty quick and to the point. Great news off the clock. Excellent information as always on 15 and 15. It's in the books, which means it's a great time for you to get on Reyes Financials. Today, exclusively for our Finance Report viewers, David has a great offer for you. Right now, for the first 5 callers with a portfolio of $500,000 or greater, he's offering a complimentary retirement blueprint just for you. This will allow David and his team to sit down with you personally and provide you with a roadmap, analyzing where you are right now and discuss your best steps to really get ready for a successful retirement. It's a game plan to get you where you need to be. The number to call right now, 858-293-4644. That number, 858-293-4644.
The road to retirement can be filled with twists and turns, but it doesn't have to be. And joining us now on the road to retirement is Mr. David Reyes. Let's take a look at this roadmap here. David, our first stop on the road to retirement is, of course, income. Let's talk about why.
Yeah, because income, everything drives, cash flow is important in retirement, right? We're retiring for what? To replace a paycheck.
Sure.
First thing we do with every client is say, how much is your net income in your paycheck? That's it. And we start the planning from that perspective because most people are shocked when they know, hey, I can replace my income. That's the day you retire, right? When I can replace my income.
We make our way down the road. A few miles, we hit growth. Tell me why.
Growth. Well, we need to grow. We need some balance between the portfolios. We kind of say, everybody's heard like kind of buy term, invest the difference, like buy income, invest the difference, right? So we want to have cash flow, predictable income, some guaranteed income, but we also need to grow the portfolio for inflation, for unexpected costs down the road, for inheritance, things that people want to do. So the fact is, growth is an important piece to the portfolio as well.
If we didn't talk taxes as our next stop, we certainly wouldn't be on the right track to retirement. So frequently overlooked. What do we need to know?
Yeah, taxes are just kind of a necessary evil. My concern is that going forward, taxes are going to be higher.
Sure.
We have massive debts. We're running $1 trillion deficit every year. It's like having a credit card to give you an extra couple $100,000 a year to spend and not having to pay the piper till later. So taxes are a concern always. They need to be part of any retirement income plan. But my concern really is future taxes. So I want to do many things I can today to help lock in the tax rates we have today. And we do some planning around that.
Before we hit our destination, we have to talk protection. What do we need to know?
Yeah, well, we got to protect our capital first because the fact is, if we don't have that money, we can't spend it, right? So again, we say this all the time. We want the most amount of income, least amount of risk, and never run out of money. So protecting capital is one of our first jobs. Our clients are investing in their entire life savings with us. We have to protect their money first, protect capital, maximize cash flow, and grow capital.
Ultimately, we do get to our retirement destination.
Yes.
Can you tell me why it's so important for all of these things to work together?
Well, to do this together, you have to have what I consider a written retirement income plan.
Yeah.
We call it the retirement blueprint. And so to have that, you need to go through all of these types of steps and talk about Social Security, long-term care, taxes, cash flow, all the things, debts, liabilities, the house, all those things, maybe rental property, maybe they own a business. It's a pretty involved process. So to get to this roadmap, to get to this destination efficiently, we need to make sure we have a plan.
Let me ask you this. For those who are 10 years out from retirement, what's the most important thing they're aware of right now?
10 years out from retirement, I think, is kind of the red zone where you first start having to contemplate retirement.
Sure.
So we have to start looking at our investment strategy, maybe start changing slightly at that time.
What are you seeing people overlook?
Cash flow, income.
Yeah.
Most people are focused on growing their money. They don't really understand how to turn that into income.
David, always a pleasure. Thank you for taking us on this journey. We do appreciate it. And for you at home, exclusively for our Finance Report viewers, David has a great offer for you. Right now, for the first 5 callers with a portfolio of $500,000 or greater, he's offering a complimentary retirement blueprint just for you. This will allow David and his team to sit down with you personally and provide you with a roadmap analyzing where you are right now and discuss your best steps to really get ready for a successful retirement. The number to call right now, 858-293-4644. Once again, that number, 858-293-4644. And before we go today, let's recap.
Absolutely. David, let's talk about capital gains. For someone that's selling a highly appreciated asset, it could be real estate, it could be a business, what strategies can they take on to help with that type of capital gains exposure?
We deal with those situations, all the time. There can be multiple. Real estate is a big one. A lot of clients in retirement don't want to manage real estate anymore. So there's strategies we use, 1031 exchanges, certain types of trusts that we can use to mitigate taxes or avoid tax completely. We do a lot of business exit planning, meaning people want to sell their business. We have like 3 different clients right now that are doing that. There's a lot of ways to mitigate, avoid tax at the sale, reduce taxes in the future, defer taxes. So there's quite a few. I mean, I say there's 3 or 4 things that can be done, enough to have real impact on the taxes and have more assets for the client.
Break down how this can help with our income needs. Well,
because think about it. If let's just say we sold a $10 million asset, and we're using some big numbers here, a business sale, right? And we would have paid $3 million in taxes on that, right?
Sure.
We have more money to produce more cash flow. Right? So it's pretty simple in that respect, because more assets means more income. Less taxes means more income. So the reality is these things can be very impactful for a client in their retirement.
Absolutely. And I know to help our viewers at home with this, you have a very special offer.
That's right. For the first 5 callers that have saved $500,000 or more for retirement, I'd like to extend an invitation to give our team a call, and we'll personally sit down with them and help create their very own retirement blueprint. And Mallory, David, we'll do this on a complimentary basis.
A great opportunity once again for you at home, exclusively for our Finance Report viewers. David has a great offer. Right now, for the first 5 callers with a portfolio of $500,000 or greater, he's offering a complimentary retirement blueprint just for you.
This will allow David and his team to sit down with you personally and provide you with a roadmap, analyzing where you are right now and discuss your best steps to really get ready for a successful retirement. The number to call, 858-293-4644. That number, 858-293-4644.
Thanks for watching. We'll see you back here next time.